Happy Friday, traders. It's 8:01 a.m. Chicago time on Friday, the 13th of December, 2019. This is episode number 1653, 58. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market this morning having a little bit of uh, whip around in the overnight session, but mainly risk on sentiment prevails. Crude is one of the leaders. Of course, the British pound strong this morning. It went up as high as 135 plus against the dollar, currently trading at 133.72 on the futures. Crude up 77 cents, trading around $60, 1.33%. The Euro stocks and the DAX have popped higher. Of course, all of us well, the British pound, the Euro stocks, and the DAX, and the euro are all on the back of the Conservative Party winning in a landslide in the UK election, which signals to the market that this Brexit, 3-year Brexit ordeal may be coming to an end. So that's where that is. The dollar's off 49.5 cents. Off 0.51%. It looks to me like risk on sentiment prevails. The overnight session pushed yesterday's high in the ES and put in a new high, overnight high at 31.88 and a quarter. I have to admit that I'm not feeling superb this morning. Woke up this, I think I'm just exhausted, but um, I'm not going to be here next Friday. Next Friday will be expiration day. For me, a notoriously poor day to trade. But I'll also be flying to a warmer climate on that day for a few days. So from Friday the 20th until Christmas Day, I am out for the end of the year. Looking at the calendar, we did have retail sales month on month released this morning. The consensus was 0.3 and the forecast was consensus was 0.5, forecast 0.3, came in at 0.2, slightly disappointing. Export prices came in slightly, well, they came in mixed, really. We get business inventories at a half hour after the open at 10 Eastern, and that pretty much wraps up the week. There are some ECB speakers talking, the Euro Summit, and so on. So that's where we stand. Let's take a look at what was expected yesterday. Yesterday is another instance of the market, just the main idea basically being blown out by a news event immediately on the open. The overall expectation, if you recall from yesterday, was for us to drive higher and to tackle, to very likely to tackle the all-time high. But we did so with an impulse push right off of an open auction, which is scenario 2, basically. We didn't have a pullback at all before we shot up. And then we had a deep pullback and then finished somewhere above the middle. Yesterday's another day where the overnight, the IB stat held steady. Historical probability of the IB high or low not being breached is around 2 to 3%. And yesterday was one of those days, contributing to that statistic. Okay, so that's what was expected. Scenario 1 and 2, we're looking for a push higher. That's what we got. Here's what actually happened. So there are a lot of rotations. So looking at this on the Renko is not going to work. So one of the things we want to talk about here, we have, remember, I'm quoting March. Let me check the volume right now, actually, on my watch list. So here's the volume in real time. The December contract has traded 356,000. The March 2020 contract traded 328,500. So the December contract still ahead in terms of volume. But I have been quoting the March contract since yesterday, and my data has been adjusted for that. So the all-time high was 57.75. If you recall, it used to be 31.55 even. And what we did is we retested that high, came up short, consolidated for a couple days right here, busted out into 31.80 yesterday in the March contract, and then we came right back to the high of these 2 days, to the balance high of these 2 days, came right back in there, retest. It looks like another piece of news just hitting the wires just now. Look at this. Look at Bookmap. This is CT Bookmap here. You can see there's news event popping quite a bit. Well, this is the news. The real-time news is President Trump saying the Wall Street article about the trade deal is completely wrong. The market is responding to that. Not sure what the article said, but here we push down. The VWAP of this splashdown here is down at 73.75, pulls back to 80, so back to the scene of the crime, and now we get the third wave. This looks almost like an FOMC trade, actually. So it's interesting because the Wall Street Journal is pretty much seems to me it's pretty it's a conservative paper. It seems it's very often pro-Trump. I'm surprised he's calling them out as fake. Um, so anyway, so going back to the review segment, we had a really deep pullback here, pushed right through the mid, consolidated in the middle, and then popped higher into the close to finish near the point of control of the day. The profile for yesterday really is saying that the consensus, yes, we did hold steady in the upper end of the range, but you look at how the distribution of volume was, and it just seemed like there was quite a bit of battling between 31.62 and 31.71, with 31.62ish being the value area for today. We are trading right in the value area from yesterday. We are holding on to those prices. We've shifted the point of control higher. The market's accepting higher prices right now. So that's the review. Looking at the overnight session, there it is. We open up gap higher, and then we are pretty much sideways through most of the session. Push up, and then we get these news events, the China, I think, Trade Ministry or something like that, basically saying that the requirement to buy $50 billion worth of agricultural products, I think soybean and others, as part of the trade deal is not workable. They're also saying that they have to be treated fairly and with dignity, otherwise there's no deal. Blah 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 blah. We've been at this for how long, people? Long time, and it almost seems like there's no progress whatsoever. This is just, pardon the term, maybe kids are around and want to block their ears, but this is just such a shit show when it comes to these. I've never seen a negotiation go like this, not even like NAFTA or something. It's just really, really terrible. It seems like both sides are using this for propaganda to the public, and the markets are responding. So here we are turning over and rotating down into the low of the session, into the low of the overnight session. The market's just not liking what it hears, and is responding accordingly. The problem with this is it really messes with our plans. It messes with the overall auction. There are a lot of disruptions to the auction. I'm going to switch back to December because the volume's slightly higher, but let's kill the iceberg displayer. Okay, all right. Let's switch. My computer is really lagging here. Oh, okay. Well, we're not doing that. Hang on, let me restart it. It did not like something. Sorry about that. Anyway, let's get into it. I just yesterday and today things don't seem to be clicking for me very well. In fact, yesterday I decided to just stop watching the market. Was committing too many mistakes just preparing. So it was just it triggered my do not trade today um, type of day. Okay, so let's take a look. First of all, it's Friday though. I want to remind you that it is like Friday. Please take a moment. I know so far it's been kind of disjointed here, but please hit the like button. It may require you to log into your YouTube account in order to do so, but I'd appreciate you hitting the like button. Again, expiration is next Friday, and right at we are still in the rollover. You can always check to see what the pace of roll is in terms of activity. Remember not to trust volume in this situation because of the amount of rolling that takes place. A lot of auto spreaders will execute and skew the volume, and a lot of people actually um, rotate manually. So the delta and the volume are not going to be very useful, and those are pretty big components. I mean, reading order flow on rollover has always been challenging. So here we are at yesterday's point of control. The expectation this morning is an open that drops us into 65.50, tweaks, pushes through and pokes through the overnight low, consolidates into the 62.5 area, looking for a pop back up into the open and an attempt to push that high from yesterday. And it may continue higher, not likely, but most likely it would turn over and push down. Secondary scenario, again, we are in range in value from yesterday's auction. The market did accept these higher prices yesterday. Of course, the volume in the March contract is very poor. We expect that, but overall prices reflect the overall market sentiment. Uh, the secondary is an open that squeezes higher, pushes through the closing swing high around 76, and then consolidates, pushes through yesterday's high, gets back to the overnight point of control, and then rolls over to push into the 66 and 62 area for the bounce. Not expecting too much here. Be cautious on the close. We still do have this tariff deadline that takes place on Friday, on Sunday. And so there may be some weird quirks into the close as people square up ahead of that, just reducing risk. So pay attention. Pay attention on the close. I would not fade a move into the close. Again, there has been talk of the tariff deadline being pushed back or whatever, but we don't know. Pay attention to your news feed. Today is likely to be very full of surprises. Okay. And then lastly, don't forget to fill out the petition if you have not for the micro crude contract. We're doing this because we want diversity in products and micro products so that people aren't risking a lot on the big contract. ft71.com/capital MCL. Please fill out the petition. Good luck today. I'll catch you Monday morning. Take care.